Good morning, traders. It's Tuesday, 20th of March 2018. Time for real-time daily trading ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, and maybe 1 or 2 questions directly from your side answered in our webinar. Our goal is quick and smart every day, but for that 15 to 20 minutes. So let's have a nice start like every day. And greetings from snowy Berlin. Today, official, it's springtime beginning, but we have snow everywhere. So I hope you have a good time like we have here in Berlin. We start with a disclaimer. Forex and CFDs are leveraged products and can result in losses that exceed your deposits. If you're a starter, please start with a demo account and make yourself familiar with long trading, short trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find everything written down there. This is me. I'm talking from the Berlin office from Admiral Markets. My name is Jens. My English is made in Germany, but hopefully some of my quality too. But I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. Today I've switched an old PowerPoint. So on Monday it's Jay's day, like today, Tuesday it's Paul's day, but this is a little bit outdated. On Wednesday we have a new day trader. His name is Giancarlo. On Thursday it's Leonard's day. On Friday it's DAX day. Our leading day traders every trading day live. And of course, if you like to trade Forex and CFDs, you will get many benefits only with Admiral Markets. For example, one of our bestseller DAX 30 CFD took a spread of just 0.8 points to the main trading hours. You can trade mini lots starting from 0.1 lots, MT4 or MT5, which trading platform you like to choose, it's your choice. And of course, negative balance protection policy, one of our safeguards. Check all the details out on admiralmarkets.com. There you will find also something about our regulatory background, and you will find also how to contact us, call us, send us an email, or visit the other channels like YouTube or Facebook. Everything's linked from admiralmarkets.com. Enough from my side. Now it's time for the day trader of today. This is Paul. Hi. Good morning. Good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. I hope you can hear my voice. Hope you can see my screen. I'm sorry to hear it's snowy in Berlin, Jens. It's a glorious spring morning in the northwest here, but unfortunately, I don't think it's going to last long. But wherever you are, I hope the weather and more importantly the markets are treating you well. So I thought today what I'd do is I'll have a little look at sterling, and we'll come to that. Excuse me. We'll have a little look at sterling because it's been an interesting few days for it. And what we'll do is we'll feed into that with having a little bit of a talk about 1 or 2 of the trades we took from last week, and also having a little bit of a look at the DAX. I know that I had a couple of questions towards the end last week about DAX, and Jens and I we do take on board your questions. We do try and answer as many as we can within our short, sharp session. But we'll do a little bit of DAX. But I want to have a little look at sterling, and then, as I said, feed into 1 or 2 of our trades. So why don't we start with having a look at one of my old favorites, Euro Sterling. Okay, it's kind of an interesting chart. Has been for the last day or two. So here we go, and let's just bring this up. This is on the daily chart here on the Supreme edition of the Admiral MetaTrader 4. So hopefully you can see the you've heard me talk about this, okay, for the last few months. It's just been in this block, okay, block 90 at the top and about 87.50 at the bottom. And I talk about a trade that didn't work for us, okay, in that last week we talked about how, well, once we'd broken this trend line, that maybe we'd actually see price sort of move towards assaulting back towards that 90 level. All right, and as you can see, that didn't actually happen. We pushed up a little bit, but actually we reversed and fell away there. And hopefully you can see there yourself. That's a daily chart there, and realistically for about the last week or so, it's just been for the most part one-way traffic. And interestingly, yesterday morning I was doing a little video for my own clients and talked about, well, sterling strength has come back into the board. I'm not entirely sure exactly why. And then about half an hour later, of course, we had the announcement that there was a transitional deal had been agreed between the UK and the EU, and not surprisingly, that had a knock-on effect onto sterling. And we shall look at that in a moment. But once again, just keep an eye on it. All right, this 87.50. Okay, look at it. It's got back down there. The last 3 times we've come down there, you know, it's pushed down and closed beneath it on one day, and the very next day, okay, it's been sort of bullied back up above that 87.50 level. So that's what kind of keeps me interested. So I'm going to just be keeping an eye on that, see how price reacts to that level, okay? If it comes down and closes beneath it, all right, and carries on, well then, you know, we're just going to get extended sterling strength and a little bit of euro weakness. But, you know, if we push down back up into the middle of the zone again, well then invariably there's clearly somebody you know, buying euro or selling sterling at that kind of level that's particularly important. So, you know, as I said, you know, we had a trade that didn't work out for us, but you know, the important thing to take away is, you know, the market is always communicating to you. The market is always communicating to you, okay? And you know, if you do have a trade that doesn't go your way, well then, you know, it's your job, it's your remit to get as much value as you can out of it. You can learn from it, okay? You can learn from it, okay? That plan didn't work out, okay? Did I follow my plan? Yes, I did. Well, then that was my job. My job is to manage risk and to follow my plan, okay? So, you know, it's a case of this market's always communicating to you, and there's always value to be derived from, you know, from every trade you take, both the ones which are a business expense and ones that generate revenue for your trading business. So just keep an eye on that, and we're going to come back to sterling in a little bit more depth at you know, in a sort of a little bit later on in our piece. So, but you know, as I said, we wanted to have a quick chat about DAX. I know somebody asked about it last week, and we couldn't really cover it in as much detail as we wanted. So here we go, DAX. Daily chart, okay? You know, it's a very, very popular trading instrument, okay, here with Admiral, because, you know, there's lots of moves, lots of volatility and great liquidity and great spread. So it's a great sort of trading opportunity for, especially for sort of, you know, intraday traders. So what am I seeing when I look at it? Well, you know, we had the fall, okay? We saw we had the bounce up. Let's put my cursors on here. We had the fall, we had the bounce up, and then we actually had a nice sort of engulfing channel, engulfing candle here before we fell down. And then we actually, once again, this kind of 12,000, 11,900 level, okay, has acted as, you know, strong support, and price has pushed up. But, you know, what we're noticing is that, you know, what I'm seeing is that, you know, here we go, all of our lows are higher, okay? We're getting lower highs along the way. And if we look at, you know, one of the trades we looked at, you know, last week, okay, one of the trades we looked at last week was, if I just go down to the hourly chart, you know, we had a look at, you know, price coming back up here, okay, to retest this recent high on the DAX. And, you know, we were short here with our stop above, okay, here around about 12,440. And price dropped, and actually we ended up getting out around about, I think it was about 12,290. It gave us a nice, I think it was a nice 4-to-1, okay, reward to risk on our trade. But as you can see, it actually continued a good deal further down, and that's what we've actually seen again. It came down. It's created there's a longer term trend line there, okay. That if I just have on the 4-hour, you know, I'm kind of looking at that trend line. It's come down. It's kind of moved back up. And then, you know, what we've seen again is, you know, price has put in rejection candle here, okay, at that 200 period moving average, at a zone we know there's supply there, okay. And what we've seen is price has moved down, okay, again. And what I'm interested in here this morning is the case that, you know, price has broken that trend line. It's tried to push up. It's kind of kissed the trend line. And then this morning we've had, you know, it's a key reversal. It's an engulfing candle. Look at how that candle completely engulfs there. And so with that in mind, I'd be very keen to sort of look at, you know, taking a sort of a longer term, maybe a bit of a swing trade down there, okay. And I'd be sort of looking at myself, well, I'd be wanting to sell up here, okay, halfway up the bar around about 12,230, 12,240, okay, with my stop above there about, once again, about 12,290, just above there. And then, you know, what I'm looking at is, well, you know, as I said, we know that this level here, okay, 12,000, 11,900, okay, has been an interesting level. It's been a strong level. So, you know, I'm gonna err on the edge of caution here, okay, and just put it in front of 1,200, okay, just in front of 1,200 there, about 1,210. You know, but once again, you know, there we go. You know, we can see, you know, we're risking very little to have a very, very good reward to risk. That's the sort of basis of my trading, you know, risk very little to have a good sized reward to risk ratio, you know, 2-to-1, 3-to-1, 4, 6-to-1. That's why if a trade doesn't work out, like the euro sterling trade didn't work out, that's fine, because I know that the trades that do work very, very well, and that's the way I like to work. So there we go. Let's see how that trade plays out for us there on the DAX. So there's a little bit of a DAX update, and as I said, I want to have a little chat about some of the sterling. Okay, as I said, started to see a little bit of strength coming back into the mix towards the end of last week, and there was not really a massive amount to in terms of fundamental news to really get me excited about that. But it's always the way. We have to trade what we see. You have to trade what's in front of you. And, sterling strength came on, and then, as I said, lo and behold, sort of late yesterday morning, they announced that there's a transitional deal done, and what we saw a real sort of a real shift into sterling. Okay, we saw that knee-jerk reaction of a shift to sterling. So, as always, what I have here, you can see at the bottom, I've got a profile set up for the British pound, and this is what I like to do for all of the major currencies. I've got it here on the daily chart. I've got euro sterling here, pound against dollar here, pound against yen, pound against Swiss franc, pound against Aussie, pound against Kiwi, and pound against Canadian dollar. And hopefully you can see that just on the daily chart, I can just get a very, very quick look at, well, where's the strength, where's the weakness. Sterling has bullied its way back to the top of the strength matrix, okay? And we still have those condors that are at the sort of the lower end of let's say the strength matrix, in particular the Aussie dollar and the Canadian dollar. So, well, let's have a little look at what we can see in a trade there. So, I'm kind of interested here in pound against yen. We've already looked at euro against sterling. Pound against yen. Yen has been very, very strong. Sterling has been sort of come back in an element of strength. There's a little bit of a battle going on there. And here on the daily chart, hopefully you can see we had throughout February and into the start of March, we had a really sort of a sell-off there as the yen became strong because there was a flight to safety, okay, into the Japanese yen as part of the let's say the little hiccup that we had at the start of February. Well, since then, what we've seen is we've had a nice flag pattern growing there, okay? And I want to just get interested in that and start to take a little bit of a further look. If I go down to the 4-hourly chart, here we have, there's that flag pattern. And, hopefully you can see, ladies and gentlemen, it's just been swinging, grinding its way up nicely. We had actually, a nice sort of almost like a flag pattern within a flag pattern there. A nice sort of, call it a flag, or maybe some people might even call that a bit of a channel because of the length of it. But, you can see that, the price has been reacting nicely. Technically, it's just been grinding up, grinding down. And so I start to look and see, we've hit this 200-period moving average. This morning, we've just had the UK news that, the inflation rate fell to 2.7%, just a smidge under what was expected. So, we had yesterday a bit of a knee-jerk reaction in sterling strength. It wouldn't surprise me today if there's a bit of profit taking, there's a little bit of people sort of just taking some of the profit that they made yesterday. I notice I've still got an element of yen strength across the board, and so I'm kind of interested to sort of maybe take a shorter term trade here as another part of the swing, as it builds this flag pattern. So, as always, I want to use the Admiral Markets, the Supreme Edition mini terminal. I think it's a great tool for traders. I'm interested that, what happened is we've finished here with a real rejection candle at the sort of the top of this trend line, top of the flag at the 200-period moving average. And what I'm going to be interested is to see as well, can we, will we get a little bit of a sell beneath there, okay? Just, maybe stop above it, above the 200-period moving average. So about entry about 148.90, stop loss about 149.50, and I'm going to target down towards here, down towards the sort of the end of the sort of the other side of the flag pattern at the moment. Okay, that'll give me about sort of a 2-to-1 reward to risk. And there's my trade on. Okay, and what I'll be having is just a case of excuse me, just looking at the a decision point, just having a decision point just here, okay, around about the 50-period moving average. I have a decision point about 148.10. What does that mean is I watch price gets there, and I look at how does price react when it gets there. Does price slice through? in which case I'm very, very happy. Does price take a bit of a breather? That's absolutely fine. Or does price start to revert there? Well, then a case might be a case that the narrative changed and it might be a chance for me to step aside. So I always have a decision point there to watch. So I have a little pound yen trade there, and picking up on our it's a little sort of intraday trade I'm going to sort of have a little look at is excuse me, as I said, I'm interested in sterling strength, and as I said earlier, we've got bottom of the barrel at the moment, sort of Aussie dollar, Canadian dollar, the COM-dolls in particular, they have been pretty weak. If we look at this here, this is the pound against the Canadian dollar daily chart for the last few months, and you can see that it's just been in a lovely trend, okay, a lovely uptrend there, which has sort of accelerated over the last month or so as the Canadian dollar has become the whipping boy for everybody. And I'm just going to go down and have a little look at for a trade for us here. What I'm interested and intrigued to know is that this is the 1 hour chart now here, so we sort of just we just kind of, we've moved up, we've gone sideways, moved up, moved up, gone sideways, moved up. And I'm interested in this. We talked about this maybe a month or two ago in one of my sessions about, when I see a big move up here, okay, when I see a big strong move, big strong wide bars, I'm always interested to know, well, where did that start? Where did that come from? And we can see we had a little sort of, a little bearish spinning top there, a little bearish candle. It's the place where it all started. So I'm kind of intrigued to know, will price sort of just, retrace back to there? Will it retrace back to there and give me an opportunity to fill some of the orders that'll be left there before it takes its next leg up? And so, that's what I'll be looking at. Okay, just maybe a little bit of a small intraday sort of buy trade there, stop just beneath the lows, and then I'll be sort of just targeting these recent highs. Okay, so that's looking around about entry about 182.67, stops about 182.42. So you've got about 25 pips of trade risk, and then a target, it's a target there about 183.67. So, once again, I'm risking 25 pips to make 100 pips around. Okay, that's a 4-to-1 reward to risk. That's my trading style. Those are the kind of trades I like to take because I like to have a good asymmetric reward to risk ratio. So there you go, ladies and gentlemen. We had a little bit of a fly through there, but as always, I try to get through as much as we can. And if there's any questions, Jens, for the last moment or two, I'll happily sort of have a little look at what we can do to try and help.
I'm here. Maybe one market we should take a look. It's S&P 500. If you have 1 or 2 minutes more, what we have, maybe a look to S&P Index CFD, please.
Absolutely. Let's see what we do. Okay, so it's just we can always find them. Excuse me. Always looking to sort of work and trade in these, and then we'll just bring these up. Okay. Excuse me, I've got a little bit of my cough and cold here. I thought I already had it set up for myself here. Okay, so S&P 500. Okay, we've got plenty. We've got the Nasdaq, S&P 500 chart window, and let's do a little bit of quick analysis on it. So I'm just going to put my normal template on. All right, just a normal simple template. I know we have new traders here. Okay, so it's a case of 20 period simple blue moving average, red 50 period moving average, and a green 200 period moving average. Very, 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 very simple. So we've talked about the American indexes as well. The thing that interests me, okay, is that after we had our big sort of fall off at the start of February, we looked at particular levels and zones that might be of relevance or interest to ourselves, and we sort of looked at this kind of 50.62 level, and for the S&P at the moment, I see that it's a little bit of I see that in a kind of a little bit of a blocker, right? Which is a kind of a good and a bad thing, right? What do I mean by that? Well, the S&P 500, it's the bellwether for the world, okay? The bellwether for the world. If you ever look at the Nasdaq actually, blew north, okay, and I think it's actually probably come off the top. It blew back up above its north. But the S&P, okay, is just I see that as coiling up, okay? I see that coiling up. If you want to have a look at it, a nice chart, have a look at the Dow there on the daily. That looks like a triangle that is forming. The S&P, I don't really see, a enough points for a really good triangle there myself at the moment. Some people might say so. I think it's a little bit it's not necessarily right for that yet for the moment. I don't see the sort of price action sort of doing that in a nice way necessarily. But what I see is S&P 500 is definitely coiling up. Okay, they're definitely coiling up. And if I go down to sort of the smaller time frames, okay, we can see really for, if I look at that since, 9th of Feb, so, sort of 5 weeks now, it's just been in that kind of range there, okay? In that range we've had, sort of, 2,800 at the top of the game, 2,650 at the bottom. And so I see it, we're just coiling up. We're going to continue to coil up, maybe sort of 2740, 2750 being the datum of that coil. And then what I would need to see is, kind of an explosion one way or another. Which way will that go? Well, if I'm honest, what I see at the moment is, my view would probably be more to the downside. Just looking at, we've seen how the kind of the Dow has sort of nudged its way down. The DAX is nudging its way down. So my bias would be to the short side. But as always, I trade what I see. I trade what I see, and and we'll wait and make a decision upon that. So there you go. I hope that helps, Jens. I hope that gives you a bit of quick insight on S&P 500.
So tomorrow is another day. We have 5 days a week, 5 different traders. So thanks for today, Paul. If you'd like to join Giancarlo, then join us tomorrow to the same time. Have fun. And if you'd like to view and listen to the video session again, just visit one of our webpage channels, Facebook and YouTube, and you will find it displayed there. So a couple of hours later, this webinar is recorded on YouTube. Thanks a lot. Have a nice day, good trades, and hopefully see you tomorrow to the same time. Bye.